Welcome to the September 4th, 2020 video version of the Wagner Daily. My name is Rick Petticelli, and as usual, once a week this video replaces the written commentary portion of our report. Hopefully it serves as a nice change of pace, as well as offer some insight as to how we set up our charts and what time frames and indicators we use. First up, we're going to run through a few broad market averages, then cover open positions in the model portfolio, and finally we'll see what's out there in terms of potential new setups, though after Thursday's beatdown, there might not be much out there for us to do. On to the NASDAQ composite. We discussed in Thursday's report that the NASDAQ, after a steep run up over the past few weeks, formed a bearish hanging man candle, which is basically a hammer, which we normally look for at the lows. Like this type of day here, well, that's not the lows, but we're looking for hammers at the lows. That's a bullish sign. When you see a hammer after a big advance and it's a wide hammer, a wide range day, that's usually not a great sign. If there's further weakness from there, that confirms it. Obviously, Thursday's weakness confirms the bearish action on Wednesday and about a 6% sell-off off the highs. But the price action found support at the 20-day EMA, which has been a friend to the NASDAQ since it bottomed out. And we've seen a few pullbacks that have been this sharp during the past few months. There was a 2-bar pullback of 6% in June and another 6% pullback in July. Each of these pullbacks led to a few weeks of sideways consolidation and then eventually higher prices. Certainly that could be the case once again. Market could just chop around for a few weeks. But the run-up prior to this sell-off was a bit more climatic in terms of price action in leadership stocks, with stocks like Apple, nasty action the past 2 days, and Tesla down 20% off the highs. So some leadership getting hit. Also, even a classy trending stock like Nvidia up almost 100% since the follow-through day in the market. And this stock had a sell signal probably around this week here on this move through this trend line here. It broke through the highs of the top trend line and gapped higher, gapped up, and then gapped down. That's an island reversal at the highs with big volume. So that's a sell signal, as well as a lot of our open positions getting stopped out, not much holding up. That tells us this pullback might be a change of character from prior pullbacks, and that we could either see the price action in the NASDAQ break down below the 20 and possibly test the 10-week MA. I think the odds have increased for that, and we could still very well hold up at the 20-day EMA and just chop around for a few weeks as we have before. But we just don't see a lot of stocks right now that are ready to move higher immediately. Maybe in a week or two we could see new setups emerge, but I think out of all the stocks I looked at, maybe only the gold and silver mining stocks were actionable overall as a group. But for the short term, we're basically just laying low. There's not much to do. Don't really want to sell anything short here after such an extreme sell-off. And really there's nothing for us to buy right now. We don't really want to stick our neck out and take on any new exposure here. I think it's just best to sit on our hands, not do much of anything, just see what happens over the next few days. And that's pretty much the same scenario for the S&P, which also had a strong run up and then a sharp sell-off. But given this nasty close here, or what could be a nasty close on the weekly, so this is a weekly bar on a pickup in volatility and a close near the lows of the week, unless Friday is a really bullish recovery. This will be a close near the lows of the week, which when we see this type of action suggests sideways to lower price action in the short term. And let's go back to the NASDAQ composite to see that. So here's the same thing, basically a pickup in volatility, a false breakout to new highs, and a close near the lows of the week. That suggests a sideways to lower price action. All right, on to open positions in the model portfolio. We're down to one position in CRWD. We did stop out of 9 positions, I believe, on Thursday, with several of them over the past 2 days. Stocks that we've taken profits anywhere from 8 to 20% and even 30% in crowd on partial size. And then there are a few uh, break-even trades and a few minor losses in PDD and AMD. And of the ones we stopped out, there's only two stocks in in Shop and DT. Those were the only two stop outs that were recent trades that were near a full loss. And Shop, we entered above this 3-day pullback, and it just reversed on Wednesday and then followed through the downside on Thursday. So a nasty pullback there. And DT, we entered around 45. We stopped out of partial size below 45, more below 44, and the rest below 41.89 here. And this is some pretty ugly action. So aside from that, we were able to take some profits in Netflix at 5.52. We sold, and that was for 10% gain in Netflix. We sold Amazon for an 8% gain beneath Wednesday's low. Lulu was sold for a 17% gain on the open, which opened below our stop, which was fairly tight due to this hammer here at the highs, the hangman. And we did sell a third of CrowdStrike Wednesday prior to earnings around 140 for a 34% gain. We stopped out of another third beneath this 2-bar low, and we have a really wide stop on the remaining third just below the 9 MA, and we'll have to see if that holds up. If not, then we'll be 100% in cash. And we could say that all these stop outs, not much look good. That adds to the bearish evidence that's building up here over the past 2 days. And in terms of what's out there, potential new setups, from our scans last night, nothing really caught our eye. And given the nasty selling of the past 2 days, we have little reason to establish new entries. And there's nothing to do on the short side after such a sharp sell-off as well. So we're basically just in what we call SOH mode, sit on hands, do nothing. I did mention a bit earlier that mining stocks were looking pretty good. And if we look at GDX, it's still holding up above the 50-day MA and on the weekly chart here above the rising 10-week MA. That's pretty nice. There are a few silver stocks that are looking pretty good. POS is tight above the 50-day MA. WPM, this is tight action above the 50 and above the 10-week. So these stocks look like they could be actionable. We'll have to see. But really, aside from the miners, there wasn't a group that looked great. Most groups are either giving back recent gains or breaking down from a nasty false breakout. I did mention a bit earlier that we stopped out of two stocks around break even, and those were PINS, Pinterest, which still has a constructive pattern after a big volume gap up, and that could still potentially be in play as long as it continues to set higher lows here over the next week or two. And the other was NVTA, which is still, looking at the weekly chart here, very much a bullish pattern above the rising 10-week MA. Though this is the second false breakout, so let's see what it does from here. If it breaks down below the 50-day MA, then it'll be off our actionable watch list. If it can hold up above the 50, who knows? It could be ready to re-break out within the next week or two. So I didn't really want to spend too much time on potential buy setups or what we're looking at because anything can happen. Some stocks might look good this week, but if the market has a rough few days again early next week, then we might need several weeks of basing action. But I did wanted to mention, for those of you who like to buy stocks that are big movers off the lows, that are chasing momentum, which is fine, I just wanted to list a few examples of stocks like NKLA. And what I'm speaking about in particular are stocks that have these monster run-ups off the low of, say, like 300, 400, 500, 600%. Once they're up, 100% and they're correcting to the 10 or 20-day EMA and the pullbacks are in the 25, 30% range, that's something you can monitor and it still has strength. But once these stocks have moved 500% and they start to break down below the 20-day EMA, and they're more than 40% off the highs, especially if you're looking at something that's 50% off the highs. What you're looking at is I think more or less a fool's gold type scenario. Yes, everyone looks at these charts and sees how strong they were, such a monster move, but usually that initial move is all you'll get, and that's the end of it. And the rest is just a lot of pain. And sure, you might be able to catch a break of a downtrend line and catch a quick 20%, but I think in trying to do so, you might catch a few nasty 10% sell-offs or even more. You might be part of a gap down below the 50. Another example would be something like CELH, Celsius. And here we have just a monster run up. So this price action is constructive. And this isn't too bad over here at 30%. But if it does break down further from here and say it pulls back to 12 and it's 42 to 50% off the highs, I'd probably remove it off a watch list. Don't try to go after that monster mover after it's had its correction, because then you're basically the late money, chasing setups that are after the fact, after they've become weak and now are obvious to everyone. So you want to avoid that if possible. All right, so that's a wrap for tonight's video. Hope you enjoyed it. And for those who would like to learn more about our style of trading, which is based on William O'Neill's cancel him strategy, with our sort of take on it after running this system for almost 20 years now, head on over to our blog at morpheustrading.com/blog. We have over 10 years of articles based on entries, exits, risk management. Again, thanks for joining me and have a great weekend.